Who are the best pension providers in the UK? And this is where there's some confusion between a pension fund and, say, a SIP or somebody who provides funds. So take Vanguard, low cost, passive investing, 0.15% per annum, capped at £375 at the time of speaking, or AJ Bell, sort of similar kind of figures. Best Invest comes out there. That 0.35% figure often comes in. And then there's some other fees. Pension B comes up, AJ Bell. Now, don't get confused, and this is the point where people switch off anyway. There's a difference between, say, a SIP, which is an account. It's just like a bank account, but anything growing in there is tax-free, and what grows in there are your investments, which might be that you say, hey, I want to buy some Microsoft shares or British Aerospace, or a fund like an exchange-traded fund. Why is it called an exchange-traded fund? Because it's traded on the London Stock Exchange, for instance, but it's a fund of other stocks. And we'll come to whether those are a good idea in a second. People often get put off thinking, well, I don't know which company to buy, and that's a legitimate concern. There's a cost to having such a SIP. There's a relatively small cost, as you've seen there. It could be as little as 0.5% per annum, plus fees of buying and selling those stocks. Don't confuse that with the funds the same broker, i.e. the account creator, we call them brokers. If it was a bank account, you call it a bank, will try and sell you. So if it's a Hargreaves Lansdown, you'll start getting emails saying this fund manager went to Oxford University and he's awfully clever and he's got a insert here, clever little marketing title like AI fund. That's completely different. And you think, well, I'm giving money to an expert. Now, here's the problem. Whilst you think you're giving it to an expert and the marketing bump sounds phenomenal, okay, because that's the job of marketing bump, which makes you think, oh, I'm going to be able to retire rich, and they'll do some projections which say, oh, yes, you're definitely going to retire rich. After all, he went to the right universities. What actually tends to happen is they don't even outperform what's called an index tracker. And an index tracker is what you could have just bought yourself anyway without having to pay the fees to the expert. Again, they'll have all sorts of excuses why you should use an expert instead. I've spent my life, whether it's through my books or TV show, and they're international bestsellers published by the Financial Times, by the way, and they're not small books either, trying to get people to learn how to do it themselves. If they don't want to do it themselves, at least educate themselves so they can ask the right questions. So you might then ask, well, which broker should I open a SIP with? That's just a cost issue. And they're much of a muchness. I couldn't really care less as long as you're not actively trading. You might do a free trade or a Barclays or a AJ Bell or a Hargreaves Lansdown or Interactive Investor or Interactive Brokers. Oh, those are some of the ones I can think of off the top of my head.